Hey guys, in this video I'm going to be talking about legal hacks, 2 to 3 legal hacks to buy some amazing property in a rising market, in a hot market when the price is going up $10,000 every 2 weeks or $10,000 every month or $10,000 every 6 weeks. How to actually secure property in that kind of market, because it's pretty hard to do that. So hey, my name is PK. I help people achieve passive income through property by buying the combination of short-term growth as well as positive cash flow without paying bucks for a buyer's agent, without wasting weekends at inspections, and without wasting your weeks, months and years on realestate.com and stuff like that. And yes, I'm sitting on my lawn in front of my car. Don't know why, I just am. So let's go into this. So I know so many of you are probably buying in markets, and look, I'm happy to not be secretive about markets. Hobart, I wouldn't buy there right now because the best time to buy was 4 years ago. It's already risen like more than 60-70%, but if you're still buying in Hobart, it's actually still remarkably hard to buy in those types of markets, because as soon as something comes for sale, you call the agent and it's already under offer, and you're like, how did that even happen? How is it already under offer? Like, I literally just got informed that this was even for sale. And when that happens week after week, month after month, that's when you start getting despondent. That's when you throw your hands up and say, look, this is all too hard. So I'm going to help you out with that specific conundrum. And look, we're not buying in Hobart, but we're buying right at the bottom of the cycle in markets that are now just moving or just about to move, and those that are moving very fast. So including my clients, and if you're one of my clients, this is gonna, we talk about it in the course, but this is gonna be super valuable. And if you're not, this is still going to be valuable to you, okay? So let's say you are buying in a particular suburb, and the prices are increasing every single month, okay? And I've done a video previously on how to buy off-market opportunities, how to value property in a rising market and not miss out in a hot market. But this video, I'm going to be talking more about legal clauses, okay? So this is the way that you will actually buy a property. And I'm going to give you an example of one of my clients. I'm not going to say her last name, but her first name is Sneha. She lives in Sydney, and what she's just done in a suburb in Adelaide, where she's just bought, is that property went on for sale, and within 2 hours of her actually finding out that it was for sale, she got on the phone with the agent, asked a series of questions to break down the information asymmetry that exists between the buyer, you, and the vendor, the seller, that gives them all the power. Break that wall down and get the power on our side. And she got that property under contract in 2 hours after it was listed, okay? And so you're probably thinking, well, that's great, but isn't it a bit risky? Like, she hasn't done an inspection, she hasn't done any like due diligence on it. What if it turns out to be a dud? Let me explain some legal hacks. So the only reason you would even consider a property is if you've done your suburb due diligence, right? We're not just going from suburb to suburb to suburb. We're fixated on 1, 2, or 3 suburbs, having done the data analysis. We're fixated on a particular pocket of that suburb. We're fixated on a particular street and a type of property that suits that suburb. And as soon as something comes for sale, we pounce on it. And the reason we can pounce on it and we can get it, under contract within 90 minutes or 2 hours of it having gone for sale is that, especially in South Australia, there are some very, very favorable clauses. So in South Australia, which is a little bit different from other states, they have this cooling off period. It's for 2 business days, but it's amazing. What it allows you to do is basically bail on the contract without having any reason to say so at all. So whereas in Queensland and other states, you have 5 days cooling off period to bail basically with no reason, but then you need to pay 0.25% of the purchase price, which is actually quite expensive on, let's say, a $500,000 property. That's like $1,000, which you don't want to do, right? That's going to cost you $1,000. But in South Australia, they don't have that. You have 2 business days. So let's say you get it under contract on Friday. You actually have till Tuesday to do your due diligence. And if you say, hey, no, it didn't work out for me, you can just give the agent a buzz and bail with no excuse and with basically no financial penalty. In South Australia, this is what people don't know. It doesn't actually cost anything to bail. You don't need to give that 0.25% of the deposit like you do in other states like New South Wales and Victoria and Queensland. In South Australia, you just say bye, and if sometimes they charge you $100 if you had put down a $100 deposit, but most of the time they don't even charge that. So it's amazing how quickly you can beat unsuspecting buyers if you're an advanced property investor in Adelaide. As soon as you see a property, you call the agent, ask those questions to break down information asymmetry, get the right price, and just get it under contract. Okay, and whether that's a conditional contract or an unconditional contract really doesn't matter, because you still have 2 business days, which can be 4 real days if it's just before a weekend, to bail. And in that time, you can actually get your property manager to inspect the property. Now, this isn't a building and pest inspection yet. This is just a quick 15-minute, 20-minute, half an hour inspection by your chosen property manager to go in that 2 days time or in that 4 days time, see if the property is legit, see if it's real, see if the photos are actually like they were on Real Estate or Domain, and give you a really, really good understanding of whether this property is worth pursuing or not. Okay, and because you can do that in South Australia, you can just do that as many times as you like, of course within reason, without it actually costing you anything. And I've done different videos on how you don't need a buyer's agent, because your property manager, if you're in Sydney, your Adelaide property manager or wherever you want to buy around Australia, more than happy to do the inspections for you, basically free of cost. So that's a whole different topic. Go to another video for that. But what that allows you to do is get that property under contract. Now, what all the other buyers will be thinking is, oh, look, great property. Let me think about it. Let's discuss it with the husband. Let's discuss it with the wife. Let's go to the first open home, and then we'll kind of sit back, assess our options, see how we go from there. As soon as the first open home is gone, it's too late. I'm going to repeat that. Really connect with this. As soon as in a hot market, the first open home has been had, it is now too late. If you want to buy a property in a rising market, you need to get it under contract before the first open home. So ask the agent when you're on the phone, as soon as it's listed, unless you get it off market, ask the agent, when is the first open home? And you know that you need to get it before then. And oftentimes we put a time bomb on our office to say, Mr. Agent or Mrs. Agent or Miss Agent, we need an answer before the first open home, and that's what our offer is conditional on. Okay, so do it that way. You still have time to do your due diligence, because you still in Adelaide have that 2 to 4 days to inspect it, really think about it, and then you can always bail or continue. Okay, so I just want to make that point again and again and again, regardless of whether you're a client of mine, and I know there's probably hundreds of you watching, or whether you're not a client of mine. If you are buying in a rising market, if you are buying in a hot market, and by the way, a hot market where properties are going quickly is not to be misconstrued as a market that is experiencing capital growth. Those two aren't the same. I remember about 5 years ago, it was really hard to buy a property in Logan, but property prices have been zero, or capital growth has been zero since in the last 5 years in Logan since then. So don't mix the two. But anyway, coming back to the point, if it's a hot market, if prices are increasing, then you need to get that thing under contract in your favor before the first open home. Okay, as soon as the open home is done, it's too late, my friends. So before the open home, so get it under contract. You may want to discuss with your mortgage broker to see whether you can actually even entice them to not go to open home by giving an unconditional offer. Now, even in an unconditional offer, you still have the cooling off period. Don't forget that. But in an unconditional offer, you can always bail on building and pest, and you can always bail on finance. Now I'm going to talk about two other legal hacks. We've talked about cooling off period in South Australia, which is really the only state I would really recommend exercising the cooling off period. The other states and territories, it costs too much. It costs too much to exercise the cooling off period, but in South Australia, it's like a get out of jail free card. The other two hacks are building and pest inspection and finance clause. So get that property under contract off market before the first inspection, and you still have time to bail. Now, some people think that building and pest inspection is not a get out of jail card, right? It's not a get out of jail free card because they cost around $500, but it's still a get out of jail card because if you put the right clause in your contract, you'll be saying that this offer is conditional upon the building and pest inspection being to the buyer's absolute satisfaction, absolute discretion. What that means is even if the building and pest inspection is basically all good, you can still bail. Legally, you are sound because you have termed the contract correctly. So that is always a get out of jail card. It's like putting in a due diligence clause. The vendor in a hot market will never accept a due diligence clause, but they will always accept, or in most cases accept, a building and pest inspection clause, and I never recommend doing it without that. And so you can always bail, right? So get the property under contract before the inspection, before the first open home. You can always bail afterwards, right? And then you've got your finance clause. And even if you're thinking, well, PK, I have enough money, we have enough serviceability, enough borrowing power, we're never going to have an issue with finance. A little bit of a dodgy thing, and look, professionally speaking, I'm not recommending this. Personally speaking, I'm just telling you as a friend, you can always get your mortgage broker to put in writing that you didn't pass finance, right? And so that's also a get out of jail card. Now I know there'll be lots of people watching saying that's not ethical, that's not recommended. I also don't recommend it. But if I was telling a best friend of mine what he or she could do if needed, then that is something that you can do, right? You can just get your mortgage broker to say, hey, PK didn't meet finance. You can just take that to your conveyancer, and that's a get out of jail card as well. But you shouldn't even need to use that. In fact, if you're buying in a hot market, try not even put a finance clause if you are dead set confident with your broker that you will pass finance. Okay, so the first thing we talked about was cooling off period. In Adelaide or anywhere, get that contract under offer in your favor before the first open home. And you might need to put a time bomb, an expiry date for your offer to enable that outcome. And I've done a different video on how to value properties so you're not trying to bargain, but at the same time you don't overpay in a hot market that's rising. So get it under offer. You can always bail in 2 to 4 days in South Australia with basically zero penalty. Okay, the second legal hack is the building and pest inspection. So if you're thinking, oh, look, I'm not in South Australia, I'm not buying in South Australia, I'm buying in a different state or territory, how does this apply to me? Well, the cooling off period may be less applicable because it's going to cost you more to exercise that than the building and pest. But the building and pest, spend $500 and then you can bail basically at your own discretion as long as you put the right wording in the contract in the first place. And look, the reality might be that you have to do that 2 or 3 times. You might need to spend 2 or 3 units of building and pest inspection, cost you $1,500 before you land on the right property and can actually successfully execute. But that's the cost of doing business, okay? And regardless of who you are, even a buyer's agent, they would still do that and it would still cost you that. So even another state, get it in a rising market, get it before the first open home. As soon as the first open home is done, it's too late. And then in the third legal clause is the finance clause. So you can always do I don't really want to say a bit of a dodge, but it kind of is a little bit of a dodge. I don't professionally recommend it, but if I was advising my best friend behind closed doors what he or she could do if circumstances dictated, you can get your broker to write a letter, say PK didn't meet the finance clause, and that's a get out of jail card as well. So you have these three hurdles, you have these three aspects of like a Swiss Army knife, you could say, that you can utilize to really get your skates on and get that offer get that agent accepting your offer before the first open home. And you might need to put a time bomb on it to make sure that it doesn't, it is actually accepted before the first open. But I think I'm just repeating myself now. I've said first open probably like 10 times just to ram home that point. And if you're thinking that, look, it's a rising market and this property's been there for 3 weeks or 4 weeks on the market, then I can tell you, you haven't done your area research right. You might have the right suburb, but you don't have the right property, you don't have the right pocket, the right street of that suburb. So hopefully that was super useful. I'm just trying to think of anything else that could be adding value in this particular instance. Nothing is really coming to mind at the moment, but I've done another video on how in a rising market not to miss out on properties, but also how not to overpay. And also I've done videos on how to get these properties off market, so you don't even have to worry about everything that I'm just discussing, even in a hot market, even in a rising market. I know it seems counterintuitive. Why would an agent give you an off-market opportunity? Why not put it on the market so it can be competitively bid against, bid for? But still, there are so many opportunities where every single week my clients are buying off-market opportunities in markets that are rising $10,000, $20,000 every single month. It still happens. So that's the best option. But if you can't do that, or if you haven't been able to do that, then what I've talked about today is your second best option. Okay, so hopefully that was super useful. I've talked a lot. If it was useful, let me know. And if you are actually having any problems with executing the strategy, or if you have any questions about how to do this in more detail, just comment below. I'd be more than happy to help you. And if you've been experiencing this, I know you have, because basically there are about 40-50 suburbs around Australia that are doing super well, that are booming. So I know there must be tens of thousands of you that are watching this, that may watch this video in the future, that are experiencing this right now or have experienced it. If you are, just let me know down below, all right? Just comment below. And if you got value out of this video, give it a like, give it a love, hit the share button, hit the subscribe button, and that way more people will see it and it will give value to more and more people. And if you want to learn how to buy high growth, positive cash flow properties using hyper systemization of data and more refined, advanced negotiation strategies where you get off market, under market, all that kind of good stuff, properties with value add, then I'll leave a link below to see how you can also achieve this. Hopefully that was super useful. I'm still sitting in front of my car on the ground for some reason. I just thought I'd connect with the grass, earth myself. I'm a bit of a hippie. Take care guys, PK here, bye.